Relying on individual artist longevity is the biggest operational risk that can tank an entertainment company's public valuation overnight. In this season finale, you'll discover how HYBE and Bang Si-hyuk tokenized and institutionalized choreography and IP to build a multi-billion-dollar corporate machine that operates independently of any single performer's presence. Everyone knows BTS as global dance and music pioneers, but few know the multi-billion-dollar corporate matrix that engineered their empire. By converting K-pop synchronization, high-margin global merchandising, and intellectual property rights into standardized public equity shares, they neutralized traditional talent volatility. The public sees BTS as a group of talented individuals. The financial architect sees a high-velocity, scalable production pipeline. Today, we audit the K-pop industrial complex, the most sophisticated entertainment business model ever constructed. We are moving beyond the artist-centric approach to explore the system as the asset framework. How did HYBE transform human choreography into an institutional financial product? And how does this model defy the traditional boom and bust cycle of global entertainment? This is the audit of the machine that never sleeps. When we analyze the K-pop model, we must first accept that talent is not the primary asset. The production methodology is. In a traditional Western record label, the business is built around the star. If the star quits, has a scandal, or loses popularity, the entire balance sheet enters a period of severe volatility. HYBE, led by Bang Si-hyuk, inverted this. They treated choreography, musical composition, and visual aesthetics as proprietary data points in a standardized manufacturing process. By standardizing the K-pop output, they created a system where the brand is the institution, and the performers are the high-value human capital who rotate through the machine. Think about the sheer audacity of this. They managed to move away from relying on the individual and toward the pipeline. By institutionalizing every single stage of the value chain, from training the trainees to the global distribution of merchandise, HYBE effectively became a consumer goods company disguised as a record label. They aren't just selling music, they are selling a lifestyle ecosystem. Interlude, community call to action. If you want to transition your business from a personality-dependent model to an institutional model, comment Systema below. I will send you my internal framework for standardizing your own intellectual property pipelines so you can scale without your daily involvement. This brings us to the core of this audit, the tokenization of IP. HYBE didn't just produce music. They synchronized it with digital assets and physical merchandise that create an immersion layer for fans. Every song is tied to a specific branding moment, a web-based community interaction, and a recurring product cycle. They have turned fan engagement into a data-driven revenue model. This is where the volatility neutralization happens. When you have 10 million fans who are programmed to interact with every digital touchpoint, you aren't just looking at streaming numbers. You are looking at a predictable, forecasted revenue machine. Why do Western labels struggle to replicate this? They are trapped in the star paradigm. They wait for an artist to become famous before they invest. HYBE doesn't wait. They manufacture the fame through a rigorous, high-capital training program that acts as a quality control barrier. By the time an act like BTS is launched, the cost of customer acquisition is drastically lowered because the system has already cultivated the target market. But let's look at the financial architecture of the public equity matrix. By taking HYBE public, they allowed the capital markets to fund their expansion. This gave them the war chest to acquire other labels, diversify their talent portfolio, and hedge against the risk of BTS's hiatus or mandatory military service. The public market essentially absorbed the talent risk that would have bankrupted a private label. This is the definition of institutional-grade business construction. Consider the governance risk involved here. When you own a publicly traded entertainment firm, your reputation is your valuation. If you mistreat the human capital, the artists, the stock price crashes. This is why HYBE's governance model is so heavily focused on the protection of the IP. They treat the artists as the most valuable, and therefore most protected, assets in the portfolio. It is not just about the morality, it is about the EBITDA. If you are an entrepreneur, you need to apply this pipeline methodology to your own work. What is the process that allows you to deliver your service or product? Can it be standardized, taught, and handed off to a team, or does it require you personally in every single step? If you are the bottleneck, you are not a business owner, you are a contractor. The goal is to build a system that produces consistent quality, even when the stars move on to other ventures. We must also address the legal shield. In the current landscape, where intangible assets represent the primary currency of value, the management of global intellectual property rights is not merely an administrative necessity. It is the vital spine of your corporate survival. To operate at the highest levels, you require a legal team possessing surgical expertise in cross-border licensing, sophisticated trademark portfolio management, and intricate international tax optimization. HYBE operates on a scale where a single legal oversight in a foreign market does not merely signify a setback, but an existential threat capable of eroding millions in valuation. They have successfully constructed a global legal grid, a robust infrastructure that secures their intellectual property against infringement and jurisdictional volatility in virtually every territory on the planet. This level of foresight is the defining chasm between an enterprise that merely survives and one that dominates. As we conclude this audit, reflect deeply upon your own trajectory. Are you merely creating a job? Unpredictable nature of global pop culture, transmuting it into a remarkably predictable, resilient, and multi-billion-dollar corporate empire. By deconstructing the chaotic elements of artistic trends and reconstructing them within a rigorous, data-driven framework, they have set the global gold standard for entertainment infrastructure. However, the most dangerous error you can make, one that has derailed countless ambitious ventures, is the catastrophic failure to recognize and properly value your own potential. If you are currently the custodian of a high-value asset, whether it be intellectual property, a unique brand identity, or proprietary creative talent, you are under a moral and professional obligation to implement an ironclad structural foundation designed to defend it from market dilution, and a highly scalable, automated system engineered to accelerate its growth. Treat your business architecture with the precision of an engineer. Audit your potential partners, investors, and stakeholders with a layer of methodical, cold-eyed skepticism, and consistently demand the equity stakes that accurately reflect your true market value. If you neglect to anchor your enterprise upon the right foundations, you are not building a legacy. You are simply constructing a temporary property that, when market forces inevitably shift, you will be forced to vacate. Success is not merely about the brilliance of the creative output, it is about the structural integrity of the vehicle that carries it to market. Tokenizing institutional performance pipelines transforms art into permanent corporate power. Make sure to subscribe to unlock our next advanced corporate asset architecture blueprint.